The US Fed cuts rates by 25 basis points, but Wall Street sells off as central bank says it's likely to cut rates only twice in 2025 versus an earlier estimate of 4. The Dow corrects for the 10th straight day in its longest losing streak since 1974. The Nasdaq slumps over 3%. Asian markets start the day with losses after the Fed's rate cut guidance prompts a sell-off on Wall Street. GIFT Nifty is also suggesting a big gap-down start for the Indian markets, with the Nifty set to open below 24,000 mark. Crude prices remain range-bound, with Brent around $73 a barrel. Gold prices fall over 2% as the Fed signals a slowdown in the pace of rate cuts going ahead. Government to re-examine the unusual surge in gold imports amid the indication of double counting. The Directorate General of Commercial Intelligence and Statistics takes a detailed examination and will reconcile the data with the CBIC. This comes after the gold import surged to a record $14.8 billion in November. Market regulator SEBI tightens SME IPO norms, rules that those companies having a profit of over 1 crore for 2 years out of the last 3 would be allowed to go to the public market. Shareholders in such companies are now only allowed to sell 50% of their total shareholding via an IPO. Hello, good morning. You've tuned into Power Breakfast on CNBC-TV18 and I'm Vinny Motiwala in the Mumbai News Centre. Not a good morning actually shaping up for the Asian markets, because let's start with that. Clear weakness that is coming in for the Asian markets as well, because the handover from the US market has not been exciting after the Fed's commentary that has come in. 25 basis point rate cut is there, but the commentary going forward for 2025 not exciting, and that is why Taiwan index down 1.53%, Hang Seng down 1%. None of the markets, when you look at it, whether you're looking at it a Nikkei, ASX 200, even the Kospi, all of them are in the red. Let's not forget, even Bank of Japan will be coming out with its rate cut decisions as well, rate decisions. So keep an eye out on that as well. But Asian markets clearly weak opening, and Nifty implied open, GIFT Nifty indicating a very weak start for the Indian markets. 300 points decline, more than 300 point decline for the Nifty implied open. So gap down start is what we are watching out for in terms for the Indian market as well. Nothing exciting on that front. And like I was talking about the US market, let's look at that, the handover there, because Wall Street ended Wednesday's trading session sharply lower. Now the Dow fell deeper and was in a deep red, ending almost 1,100 point cuts that we saw coming in for the Dow Jones, and this is the index first 10-day losing streak since 1974. S&P 500 also fell nearly 3% lower, while the tech-heavy Nasdaq index also closed 3.5% in the red. Now, obviously, what we're seeing is the sharp sell-off that came in after Federal Reserve signaled for only 2 rate cuts in 2025. The central banks cut interest rates by 25 basis points yesterday's policy meeting is what we watched out for, which was widely expected. Let's go across to CNBC's Steve Leisman, who's joining in with us to give us the key highlights from the Fed's policy decision and what it means for the markets now in 2025.
The Fed did exactly what I guess I said the Fed was going to do, which is the rate cut today and then project 2 more next year. But I think there's an interesting thing setting up. Let's listen to what Powell said about how restrictive he believes the Fed still is now.
I would say we are, though, in a new phase in the process, as I said. So. And that's just because we've reduced our policy rate by 100 basis points. We're significantly closer to neutral. We still think where we are is meaningfully restrictive. And I think from this point forward, it's appropriate to move cautiously and look for progress on inflation.
So he had said earlier that they're significantly less restrictive now than they were before, but still meaningfully restrictive. And this sets up this debate. I'm going to call it Powell and the Fed against Gundlach and the markets, which is that if you think the Fed is meaningfully restrictive, as Powell says he is, then he's going to drive down inflation further and he can do further cuts. But Jeff, obviously, and the market itself expressing some pessimism about whether or not the Fed policy rate is one that will drive down inflation further. I think that's the battle now for 2025.
Okay, let's move on and in fact listen into what the Fed Chair Jerome Powell had to say on the rate cut outlook for next year.
Today was a closer call, but we decided it was the right call because we thought it was the best decision to foster achievement of both of our goals, maximum employment and price stability. We see the risks as two-sided, moving too slowly and needlessly undermine economic activity in the labor market, or move too quickly and needlessly undermine our progress on inflation. So we're trying to steer between those two. You know, we've done a lot to support economic activity by cutting 100 basis points, and that's a good thing. I support the decision, and I think it was the right decision to make. I think from now, we are in a place where the risks really are in balance, and we need to see progress on inflation, and that's how we're thinking about it. So it is kind of a new thing. We moved pretty quickly to get to here, and I think going forward, obviously, we're going to be moving slower, which is consistent with the SEP.
On that note, let's also listen into how market experts and economists reacted to the Federal Reserve's decision. Listen in.
Coming into this, it was clear that the Fed should be thinking about pausing, and I think he made it clear that that's what's on their mind. The dot plot showed half as much reductions next year as the former dot plot did, which is exactly right. I thought something significant he said was that they have reduced the degree of restrictiveness quite a bit. And I think that's important because I think that's kind of where their mindset is. So I think they're still in a good position here. I think the markets are reacting in a way that's kind of interesting because this was, I think, pretty well expected. But maybe it emphasizes that there is still a lot of uncertainty out there about the economy for next year, including what fiscal policy actions we're going to see.
It was nice to hear some of what he said, which is we're still quite a distance away from where they think neutral is. So policy is still meaningfully, use the word meaningfully restrictive. But, you know, he's in no rush. The market likes it when the Fed has their back. And he basically said, I don't have your back as much as I had it for the last couple of quarters. And I think that's got people a little nervous. There's something that bugs me about all this. When we get these sell-offs and we get everybody lathered up about inflation and tariffs and deficits and interest on the debt and, oh, my God, it's all going on. The one word we didn't hear, deregulation. And I just want to throw it out there. I want to get it out to our viewers and say, that is great news. That is disinflationary and great for growth.
Yeah, I think they did the right thing. I actually also thought that there was only going to be 2 cuts. I thought the market was overly optimistic about holding to 3. So I'm not surprised at the sell-off. And actually, I think it's healthy because I think this market was sort of in almost a runaway situation, and particularly with the Mag 7 stocks. And I think this brought them to reality that we are just not going to get as low interest rates as we thought we were going to get last summer and fall when the Fed began its cycle of lowering rates.
Okay, that was all the global overnight action that we had this morning. US, Asian markets, how they opened. On that note, we're going to take a breather and take a short break. But after the break, we'll talk about all that impacting the Indian markets. How should we expect Indian markets to open today after this break? Welcome back to Power Breakfast on CNBC-TV18. And like I said, it's time that we prep you up for the Indian markets. How is all that fall that we've seen in the Asian markets, US market, how is that going to be impacting us? We have a team of research here joining in with us to set you up for the day. Hormaz as well as Sudarshan here. Good morning, guys. And not a pretty day that we're watching out for, at least from the Indian markets. Hormaz, I think this is the only time I'll be saying good morning to you. After this, maybe a teary Thursday is what we're watching out for.
Well, it definitely not hope for that at least, but the screen is suggesting otherwise. You know, the GIFT Nifty is indicating a 350-point downtick as we speak on the weekly options expiry day for the Nifty. So promises to be yet another volatile and choppy session for our own market. So what happened because of the US market sell-off? overnight. That is keeping the bulls on the edge. And also because of the Fed commentary that has come in with a lot of uncertainty, and that is what triggered a sell-off on Wall Street as well yesterday, and that is rubbing off on the Asian markets as well as on our own markets as well. The yields also rose back to 4.5%, the 10-year in the US. The dollar is back above 108, so that is not good signs as well. Now, what happened in yesterday's trading session? Well, another day of selling for the Nifty. It almost broke below Friday, the 13th low of the 24,190, but managed to close just above that. It does not look like it will sustain in today's session. Now, 550 points down already in the last 3 trades for the Nifty. So now Wednesday's low of 24,149 becomes the key level to watch on the downside. Of course, then it will become on the upside first up. Then the PSU banks are leading the fall. The Nifty bank is down 1,400 points in 2 sessions. And the broader markets too are capitulating under that selling pressure, or 70 stocks each on the mid cap and the small cap index ended lower today. Be interesting to see how much of that is impacting the broader markets in today's session. As I mentioned, it's the weekly options expiry today, and the past 2 expiries are evident of those extreme swings that we have seen in the market last Friday and the Thursday before that. So more QIPs, block deals, those that continue. The IPOs continue. 5 new IPOs opening today, and as you said, the GIFT Nifty 350 point downtick promises to be a gap down for our own markets.
Absolutely. A gap down is what we are watching out for. But which are the other stocks that you should be actually keeping on your radar this morning? We have DOMS that is going to be in focus as a block deal where FILA is set to offload around 4.5% stake in the company. So firstly, the base size is around 3.05%, and then they could increase that, upsize it to 1.52%. Overall, the floor price for that is around 2,755 rupees per share. Moving on, Lupin also is going to be in focus. They've received a US FDA approval and ANDA approval, and this is for a drug that is used in combination for some treatment for HIV in HIV patients. So this is a generic equivalent for Descovy tablets, and there's an exclusivity of around 180 days for this. So surely a positive that we're watching out for. Launch is somewhere in FY 32. So keep an eye on that one. Asian Paints, a bit of a negative news coming in here. There are a couple of senior leadership exits that have come in, and Vishu Goyal, who is resigned as the Associate Vice President of Retail Sales and Commercial and Marketing. This is with effect from December 17th. And similarly, we have Shyam Swami also, who is resigned as Vice President of Home Improvement Decor for the company. So 2 important exits coming in there. IOL Chemicals, the company is to consider a subdivision or a split of existing equity shares on 27th of December. Keep an eye on that. Brigade Enterprises has made a new launch, which is a net zero residential project launch in Bangalore. Estimated gross development value of around 500 crores. SBI, that's in focus. Ram Mohan Rao Amara has been appointed as the MD for 3 years for the company. Currently, he's the deputy MD at SBI. Bank of Baroda, keep an eye on that one. The board has approved long-term bonds aggregating to 10,000 crores in FY25. Yatharth Hospital, QIP has opened up. Keep an eye out on that, as well as we have a QIP that has opened up for Zaggle as well. So keep an eye on these stocks in trade. But F&O action, we could see a lot of action coming in here, and Sudarshan is here to tell us more on that front. What are the important cues? Sudarshan, good morning.
Good morning, Vinny. So yesterday's data is now looking a bit dated because the kind of cues that we have got from US market. Hawkish commentary from US Fed has spooked the market, and all the indices, US indices, closed with a cut of almost 3%, and its impact we can see in Indian market today as GIFT Nifty is indicating a start with a cut of more than 300 points. But nevertheless, talking about the flows of yesterday, in the cash market we saw FIs selling more than rupees 1,000 crore, but it was offset by DIs which bought more than rupees 4,000 crore. In the derivatives market too, we saw FIs selling 800 crore, and they have reduced long positions by 3,000 contracts and added short positions by more than 7,000 contracts. And with this, FI's long exposure now reduced to almost 35%, but DI client-side long exposure remains healthy, and it's at 64%. On the option front, on the call side, 2 options were active. Those were 24,300 and 24,200. And on the put side, 24,000 put has seen addition of more than 7 lakh shares. And with this, important levels for Nifty, support is now seen somewhere around 23,850, and resistance is at 24,350. And one stock that has entered F&O band is NMDC, and with this, total 10 stocks are in F&O band.
Okay, thanks so much for that, Sudarshan. Surely keeping an eye out on these FNOQs. But let's move on. And India's gold imports surged 331% to a record high of 14.86 billion in the month of November. Now, sources tell CNBC-TV18 that the matter has been taken up for detailed examination now to check whether it was a calculation error or not. Abhimanyu is joining in with us to give us details on that front.
Gold imports had shot to an all-time high of $14.8 billion in November, which is an unusual surge which has been noted by the government. Now, the Directorate General of Commercial Intelligence and Statistics under the Ministry of Commerce is going to take up a detailed examination and investigation of the issue, and a reconciliation of the data would be done with the data which is available with the CBIC. It remains to be seen till when this investigation is going to be completed and whether there is going to be any change in the trade data which has been released for the month of November 2024. Now, behind the unusual surge on the day of the trade data release, the government had cited several reasons ranging from an increase in demand for gold due to the wedding and festive season, an increase in gold prices worldwide, and also a strong investor confidence in gold due to geopolitical uncertainty, and a reduction in customs duty from 15% to 6%. It remains to be seen whether there is going to be any change in the trade data numbers and whether there is going to be any fresh identification done as part of the probe which has been initiated under the Ministry of Commerce.
Okay, thank you so much for that, Abhimanyu. But on that note, we're going to slip into a very short break. After the break, we'll talk about what's happening in the world of commodities this morning. So stay tuned in. Welcome back to Power Breakfast on CNBC-TV18. Let's move on. And equity market surely got jittery after we saw the Fed commentary come in, whether Asia or the US markets. But how is the world of commodities shaping up this morning? Let's go across to Manisha, who's joining in with us. Good morning, Manisha. What is it looking like in the world of commodities?
Well, it isn't such a pretty picture when it comes to commodities as well. The commodities have slipped as the dollar index is surged to a two-year highs, and with the U.S. Fed cutting interest rates by 25 basis points, well, that was on expected lines, but signaling fewer rate cuts in 2025 really bothers the market. So you have the crude oil prices, which slipped 1% overnight. It's a sharp decline when you see the precious metal prices. Gold fell 2.5%, silver fell more than 4% in the overnight market, and it's a similar picture for the base metal prices also, where apart from the strength in US dollar, the lack of detail from China is also bothering the space. So you have the copper prices now trading at a 3-month lows, aluminum prices fell a percentage point overnight, steel and iron ore prices also have declined quite sharply. I can hardly see any space within the non-agro space, which is trading in the green right now. Everything has seen a very sharp slide.
Okay, that's what's happening in the world of commodities, keeping an eye on that. Thank you so much for that, Manisha. But with that, we are absolutely out of time in this edition of Power Breakfast on CNBC-TV18, leaving with the Nifty implied open indicating a gap down start for the Indian markets. Don't go anywhere. Up next, we have Bazaar Morning Call.